If you're a beginner trader who feels overwhelmed by all the information out there or frustrated by your lack of progress in Forex, if so, you're not alone. I've been there too. But don't worry, because I have a solution for you. In this video, I'm sharing 10 essential Forex tips that will help you to build your confidence, improve your profitability, and take your trading to the next level. So if you're ready to transform your trades from costly mistakes into profitable opportunities, make sure to watch this video now because you will be glad you did. The number one piece of advice is to make sure you have a good education. And let's be honest, building a solid foundation about Forex market is so crucial before you make your first trade. The long-term benefits will be substantial, I can assure you, because a thorough education will help you to better understand the risks involved in the Forex market, and it will also help you to make more educated trading decisions. Meaning that investing in your own trading education is so essential to your success as a trader, regardless of approach you decide to take. Tip number 2 is to develop a trading plan. And you shouldn't be scared of words trading plan, because a trading plan is like a roadmap for your Forex journey. It helps you navigate through all ups and downs of the market and also helps you stay on track towards your goals. Without a plan, it's so easy to get lost and make poor trading decisions, and trust me, you don't want to go that way. So my recommendation is to take the time to carefully consider and plan out your approach. Your trading plan should outline your goals, risk management strategy, and the methods you will use to make trading decisions. But having a solid plan in place will help you to stay focused and disciplined as you trade. And one way to develop and refine your trading plan is to use a backtesting platform like Trader Edge. This tool allows you to test out different strategies and see how they would have performed in the past by providing you data related to important metrics like profit factor, average winning and losing trades, as well as an edge score that grades the worth of your backtest. It's a great way to get a better understanding of how your plan might hold up in different market conditions and make more informed trading decisions. So if you're looking to take your trading to the next level, I will leave a link in my description box down below where you can sign up for a 7-day free trial. My tip number 3 is to use risk management techniques. Having a proper risk management as a beginner trader is so crucial in this volatile Forex market. But trust me when I say that you don't want to learn this lesson hard way, because having a poor risk management and blowing up your accounts, it will be hard to swallow. That's why it's so important that you are using risk management techniques to protect your capital. One way to do it is by setting your stop loss orders. A stop loss order is a type of order that automatically closes your trade at a specific price level. This helps you minimize potential losses if the market moves against you. So it's kind of like a safety net. It's not foolproof, but it helps you catch yourself if you start to fall. Another way to manage risk is by setting your position sizes that are appropriate for your account balance and risk tolerance. Position size is the amount of money you are risking on a single trade. If you set your position size too high, you could end up losing more money that you can afford. On the other hand, if you set too low, you might not make as much money as you could have, so it's important to find a balance that works for you. Tip number 4, diversify your trades. When it comes to Forex trading, it's important that you remember that Forex market can be unpredictable. Diversification is a key component of any successful investment strategy, and it involves spreading your risk among a variety of different trades rather than putting all your money in one currency or trade. Okay, now we're gonna go creative. Imagine I have a basket here and you will put all your money in that basket and that basket falls. You will lose all of your money. But if you spread your money among all of these baskets I have over here, if one basket falls, you will still have many baskets left that will save you money. Tip number 5, don't let emotions drive your trades. I know firsthand how easy it is to get caught up in excitement of Forex trading, but there's the thing. When you let your emotions drive up your trades, you're setting up yourself for a failure. Think about it. When you're feeling super excited, it's so easy to get carried away and make impulsive trades. But if you take a step back and think about it logically before you pulling that trigger, you will be more than likely to make a right decision. And I can tell you from my own experience that emotional trading is a recipe for disaster, so make sure you do keep keep your cool head and stick to your trading plan. Tip number 6. Keep an eye on the economic calendar. As a Forex trader, it's very important to stay up to date to the economic events that could potentially affect your trades. Economic events such as the interest rate decisions and GDP reports can have a big impact on currency values, so it's essential to keep track of these events and know how they might affect your trades. There are many great resources available for keeping track of economic events, such as the calendar on your trading platform or websites like fxtraderkristina, investing.com, or Forex Factory. It might seem like a small thing, but it can make a big difference to your success as a Forex trader. Tip number 7. Use technical analysis. Technical analysis is a way of using chart patterns, candlestick patterns, and indicators to make informed decisions. For example, I prefer to use moving averages of 20, 50, and 200 because they do help me to identify trends, support and resistance zones, and confirm my entry and exit points. But of course, other traders might find MACD, RSI, stochastic, Fibonacci, any other technical tool to be helpful for them. So it's all about finding what works the best for you and your trading strategy, and remember that technical analysis is just one piece of a puzzle and you should be combining that with fundamentals. Tip number 8. Don't try to predict the market. One of the biggest mistakes that the new traders do is they trying to predict where the market will go next. The fact is that the Forex market is so unpredictable, and attempting to predict, it's kind of like trying to predict the weather. Yes, you do might get it right sometime, but there are too many variables at play to try to predict the market accurately every single time. So instead of trying to predict the market, focus on finding high probability trades that offer good risk-to-reward ratios. This means looking for the trades where the potential reward is significantly higher than the potential risk. Tip number 9 is to stay disciplined. Forex trading requires discipline. This is simple as that. If you want to be a successful Forex trader, you need to learn how to stick to your plan and not run from it. Of course, it is easier said than done, especially when you're faced with the short-term market movements or when your emotions start to cloud your judgment. But that is why it's so important to stay on the course and follow your trading plan. This means not getting overly aggressive over your trades or letting the greed take over you. It also means being willing to cut your losses when necessary and not holding on to the trades in the hopes of a turnaround. So make sure you stay disciplined because you will be in a much stronger place to succeed in a Forex market. The tip number 10 is keep on learning. As a Forex trader, including myself, I think it's very important not to stop learning, because by continuously learning and improving, you will be better equipped to navigate in ever-changing Forex market. I know this video is fully packed of information and it takes time to digest, but if you did really find it helpful, don't forget to like and comment down below, watch this video, and I will see you in the next one. Bye!